Now I don't know. I don't know. I don't know where I'm gonna go. The ball, let me say now. I don't know. I don't know. I don't know. Round she's moving under me. I know it's out on the sea. Just a smoker in the sky. And then soon we learn to fly. And now I don't know.
Good morning, everybody. We'll get started here in about 8 minutes. Little evening over here in Bali. If you've been out to our Discord room, you'll see some of the exciting things that we've had going on here. Little creatures in the room. Actually, they weren't little. They make a lot of noise too. Kind of like a barking sound. It's like, what's going on behind me? Then these little guys started coming out of the woodwork. Wasn't the monkeys. Yeah. Sure if this is gonna play or not. Yeah, got a Chris right off the bat when I saw this little guy going after the bottle. I don't know if you guys can see it or not. There it is. Went out to Uluwatu this morning for a walk. We'll get started here in about 6 minutes.
One more. Thank you very much. This next song was off the No Shoes, No Shirt, No Problems album. And we have never ever done this song live before, but tonight we thought it was only fitting because it sure does seem like y'all are keeping the island spirit alive tonight. That girl, he was born to see the world. All I got is a picture. Email me. After in the snow white sand, bag of seashells in her hand. Finally found paradise. On the coast somewhere beautiful, Big wind blowing through her hair, sunlight dancing on the water. I don't know how I'm gonna find her. So far on the coast somewhere, oh, running where my heart. Sometimes when the sun goes down, shadows fall across this little town. I close my eyes and I drift away. Another place, another time. The world was ours and she was mine. I dream of holding her again someday. On the coast somewhere beautiful, like wind blowing through her hair. Sunlight dancing on the water. Shadows don't know how about her. So far on the coast somewhere. Oh, oh, running with my heart. On the coast somewhere. Oh,
Well, remember in COVID, Chris, to answer your question, um, how the Fed is draining, this is just an article that came up on Market Watch this morning. But the Fed had some other things that it accomplished. Excuse me, turn off the Fed had some other things that they did during COVID when they started sending out a lot of the money. Okay, that and before COVID, the Fed could only manipulate and kind of go with the treasury, the bonds, the notes, and things like that. But during COVID, they wanted some special concessions to send out the monies and things like that. So they got involved with stocks. And now as he who has the gold makes the rules, which is kind of one of the things that the Fed is about, and the people that created the Federal Reserve Holdings or company or the bank, that was one of their sayings. But now that they are involved in stocks, there's a lot of manipulation, a lot of things that have been changing in our environment. One thing that hasn't changed, though, is the footprint that they leave when there's unfilled orders. But if they start backing away from the market, who's buying at these high levels anyway? Only the people that have the money and know when to get out. But this article caught my attention. I didn't dig into the article very much, but it does make things a little uncomfortable. Okay, it's something that we've known that's happening for a while, but now it's some people think it's conspiracy, but now it's becoming a realism. A lot of those things happening. But let's go ahead and get started today. I may turn off the video depending on how my resources run. If things start to slow up, I'll turn off the video. But welcome to our live stream. Welcome to our daily live trading room. A couple of things in the headline news: stock market bulls relay on 2016 Trump trade playbook, but yet things are a lot different now. Okay, S&P 500 in a mania as stock markets continue to rally. again, who's pushing these prices up? Is there a lot of short covering going on at the all-time highs? Who's bringing all their money off the sidelines? And it really kind of feels strange right now how the market is going up, but a lot of people are still wondering, why would I get into the market at all-time highs? Why would these big exchange traded funds and all this inflow of money come into the market at all-time highs? Okay, it doesn't feel right. Okay, so as we start to get into kind of another new era of the markets and how they might work. I mean, now we've got AI, we've got Fed in stocks. I mean, a lot of things going on here. The main thing is to keep watching for where the unfilled orders are and collecting the data. One of the things about the data that we're collecting is how we look at the overall markets, whether we're inside or outside the prior session's range, whether we're whether stocks are overpriced, underpriced, whether the futures are overbought or oversold relative to cash markets. Okay. We collect these pieces of information because they keep us tuned in to what's going on in the overall marketplace. They give us these feelers. Okay. So as we monitor different things like the inside day, outside days, and the rules around it, for example, S&P futures right now are still inside the prior day's trading range. As being inside day, we tend to shy away from taking breakout trades. And we start looking for only zone entries. We also expect the gap to fill on an inside day. Okay, and currently from the prior session's close, probably right about there. In order for that gap to close, price would have to go up, and we do have a small zone up there. Okay, a little bit of supply and less demand at that high. So that first area that we're going to look for a trade opportunity on the S&P is going to be about 6,007.5, and we'll have a stop loss right about that 6,010. So I'm going to start off with just taking a couple of micros, and then once the trend does start to establish, and that means we're making lower highs and lower lows, and the market is starting to move down. Right now, we're not in a downtrend. We're potentially at the beginning of one, but we're not in one. Okay, so I'm gonna play this off right now as a counter trend trade. That means I'm starting off with some micros, and then once the trend starts to get established, then we'll switch over to the mini contracts. So on the S&P, I'm going to set this trade up ahead of time, mainly because where I'm located at right now, location in Bali, Indonesia, there's a slight delay in the data being put out on my trading platform. So I can't wait till price gets there, then make a decision. I have to say, well, right now, currently, everything's lining up to go up to that supply. We have an unfilled, we have a gap close up there. And we also have a zone right near the Globex high. Okay. So I'm going to have to set some of my trades up ahead of time. And we're coming in at 607.50, and I'm going to start with micros. And I'm going to put my protective stop loss about that 6,010. Okay. So many of my trades tonight, you might say, well, it's a kind of a small position. Well, we're not in a downtrend yet. So if you're taking counter trend trades, then take on a smaller size. Okay. Just don't load the boat at that point. Okay. Wait till you have some things going in your favor. Okay. Good morning, Miss Liz. Good to have you here. All right. NASDAQ also. NASDAQ is outside day, it broke outside the prior session's range just by a few ticks, okay? So broke out, and so we can take breakout trades on an inside day, an outside day, and zone entry. Now, price is currently inside the prior session's range, so we do expect the gap fill on this one as well, okay? Now, I'm looking at the leg base group of candles at the top. We can see that the leg candles leaving are bigger than the leg candle in the zone. And for that, we expect price to go a little deeper in the zone. So I'm going to be a little conservative with my entry on the NQ and look for that 88.6% retracement, which is a line that is inside the zone, but I want to pinpoint that area as far as what is the price I'm looking to make a trade. There we go, 21,247. Again, starting off with just a couple of micros. 21,247. It's still way up there, isn't it? $247 even. And once filled on that, we'll come back in and place a protective stop loss, okay? Now, we have very little economic news coming out today. Sorry, Harvey, I just seen your message. Hi, Robert. You know, why is the Fed cutting rates? The question was when the market keeps rallying at all-time highs. Well, again, a lot of the data that's been coming out has been kind of questionable, okay? And if you look at multiple different resources, you might find that that it does seem strange that the Fed keeps cutting rates when everything is so good, okay? Unemployment and things like that. But some of the data has been, how do I want to say it? I'm just going to say it's questionable, okay? Because going out right now and getting the hard facts when we all want to trade, just start digging into it. Some good resources. If you look at some of the things that I've reposted on my Twitter page, or sorry, X, and some of the things that I've reposted in the Discord room about that as well. Those are some resources for you to verify that information as well. Now, I think it's important that, you know, if we do make some comments and talk about these things, is that we do our best to find some resources to back it up. Right now, we're kind of in that fact-checking information. We get information from a lot of different sources, okay? And sometimes we make an opinion or a statement that's not quite accurate. But, you know, it does impact how the media controls the public opinion, but we have to take that information and then put it on a price chart for the timing and the risk management of the trade, okay? Now, if a lot of people are thinking the same thing, they're uncomfortable, they're not feeling the market's doing the right things, or even if they feel that the data is non-truth, that doesn't change the fact on how we execute on a trade, okay? And we have to always be having our information gathering, which is whatever media source you use, economic reports and those things that are coming out, we gather all of that. But that part doesn't make our trade. What makes our trade is that picture on the price chart. And that's why we're placing some orders right now on the S&P, the orders that we placed based on S&P being an inside day, okay, inside the prior session's range, and it has not broken it. We expect a gap fill, okay? And those are things that we've documented and verified for ourselves. Now, I give a lot of the mechanics on how we do this so that you can verify information that we use on a price chart, like the leg base swoop of candles and the location of our zones, inside day, gap filling, no breakout trades. All of these are part of our pre-market routine. And if you want a good resource, we do have some recordings on the website that you can download for a small cost. You can download that video and get an idea of exactly the things that we look at and measure. It's not an end all, okay, and we're always finding something new to add to it, okay. But the consistency of measuring things helps us stay in tune when things start to change or something's not quite right. Like Robert pointed out, that why do they keep cutting interest rates when, you know, they made everything sound so bad and now they're making things sound good? And, you know, why are they doing the different actions? Okay. Something's not feeling right. That feeling needs to be backed up with some facts, and the timing and risk management of the trade need to be backed up on the price charts. So great question. Sorry for the long answer, but we must start doing our own fact checking based on the resources that we believe to be true. Okay. And make sure you find ways, you know, not just one opinion, but find multiple ones and then make your assessment. But remember, the information that we collect and document does not make the trade or help us with risk management. This kind of helps us understand the environment. Right now, we can see Home Depot's up $5 and on 13,000 shares traded. Okay, Goldman Sachs up $3.83 on 6,000. Volume is very light on the Dow 30 stocks as we're getting underway. We're about 15 minutes before the market open. Light volume like this implies that there's going to be some big volatility. Okay. We don't have any economic reports till 10 o'clock. 11 o'clock, we do have a Fed chairman speaking, and this Fed chairman is pretty outspoken, Michelle Baumann. We also saw yesterday, which was really quite interesting, Fed Powell kind of poking the bear, okay? He didn't need to answer the question that way. I think he's going to get more heat from his boss and the people that he's working for than he is going to be from President Trump, okay? Still a lot of politics going on, a lot of political things. I'm not going to try to make things political, but, one candidate versus another candidate in office, okay, they have different views and different opinions. So we consider that as that information gathering. And I thought it was kind of strange, that, Fed Powell poking the bear, and now all the drama starts to be pointing at the Federal Reserve privately held bank, okay, and who it's held by, and they are above the law unless they get abolished. Now, Congress does still have the power to what's the word they use? Congress has the power to not use the Fed anymore, okay? But it is a big bank, okay? And it's owned by a few other banks and other families. So a lot of times we thought that was all conspiracy talk in the past, but now things are starting to come out. With the light volume, let's get back to trading here. With the light volume, we expect some high volatility. That's why I'm setting up a couple of trades ahead of time, okay? Now, I'm anticipating the gap fill. I'm anticipating at the market open, we'll probably see some whipsaw volatility. So I've set up the trade on the S&P. I have risk on it up to about 6,010. Trying to catch it if it does any type of that whipsaw, and I am planning for the whipsaw due to the low volume, which creates high volatility, okay? NASDAQ, we just set up a trade as well, also anticipating the gap fill. And we found a level inside the zone at about 21,247, which is the 88.6% retracement back up into that zone. Why did we go into the zone versus a proximal line entry? Well, if we look at the leg candles leaving, they're much bigger than the leg candle in the zone. And that usually means that the zone can be used twice. And also it means that it goes deeper in the zone, okay? Therefore, giving you a little facts behind the reason why I set the trade up rather than waiting for price to get there, then pushing the button. The Dow and the Russell have kind of had their own little world. They don't have any unfilled opening gaps from yesterday. The S&P and the NASDAQ do. The overnight session, as I just was looking at a small time frame, a tick chart, you can see that that overnight session was in a pretty tight range. Okay, a narrow range. And we're also looking for the not taking any breakouts. The Dow is on an inside day. And we're still looking for the gap fill. So gap fill on the Dow, price would have to come back down. We do have a zone from the middle of the session yesterday before price dropped a little bit and started consolidating. 43,989, 44,012. Okay. Yeah, let's go ahead and set that one up. I'm just going to stick with the micros on this. Okay. And we'll look for a price to go inside the zone, just a little deeper, right around that 44,000 area. All right. And then I'll come back in and place my stop. Most likely I'll use a stop from the prior session's high. And the Russell, let's bring up the Russell. Okay. Russell does look like it may want to go higher, but we've taken out all the zones. It almost looked like an ascending triangle. Still no reversal patterns yet, no fresh accumulation of sell orders. We did have one right back at the top near the prior session's high, the Globex high, above the Globex high. We do have a zone 24.17, 24.24. No breakout trades on the Russell. Russell's still inside the prior trading session. So we're going to look for zone entries, okay? Zone entries only. So if price drops on the Russell, we do have a small speed bump area. We call this a little speed bump, an area just below the support. That would give us an entry to go long, and our place to go short would be back up at the prior session's high. Okay. And let's jump back out here. I want to take a quick look at the dollar, US dollar getting a small bounce. We're also seeing the FX markets come back down into demand, okay? Looks like the 2-year yield just shooting up, still at 4.223%. The 10-year yield moving a little slower at this point at 4.314%. Dollar moving up where it had pretty quiet overnight session. Dollar's moving up a little bit, which should impact the bonds and notes and the FX markets to pull back a little bit more. NASDAQ pre-market indicator did gap up again today, okay, implying that there's still some buying coming in on the indexes. The pre-market indicator, the way that we review this and the way we look at it, this indicator was created by the NASDAQ exchange to help them price the market or understand which direction the market was going to move at the open. Okay, so this is an indicator not created by a bunch of traders like us or retail traders out here, but it's created by the exchange. What we've noticed is that with this gapping up or gapping down, the pre-market indicator has a 92% correlation as to traders, excuse me, traders sentiment. So inside day on the S&P, and we're looking for the gap fill on the NASDAQ and the S&P, and we're looking at the pre-market indicator gapping up, that initial move after the market opens, filling that gap, going into those supply zones that we just marked, okay? That's why I'm leaning in that direction. The trend is also implying that there is some more upticks and up volume on the NYSE stocks, okay? The trend is above 2 in the pre-market, and the indexes are moving higher, okay? Generally, that can be associated with a short squeeze. And that's why I put my protective stop on there. Wanted to reiterate a counter trend trade on the equity indexes and keeping that position size kind of small until we start establishing a solid direction, okay? So back to the charts for just a moment. On the S&P, I'm expecting price to come up to the zone, fill the gap, okay? NYSE, the trend is high, market's moving up, so in light volume, kind of a real fast move there, okay? Nat gas, let's skip over here. Nat gas has had kind of a wild ride this morning, up and down. I've taken a couple of good trades on this, and right now I'm kind of shying away from it because it is so whipsaw, and I need to get right there. Sorry, I need to adjust that Globex range. Yeah, we're about 5, 6 cents. Yeah, we're really small. So the Globex range for the nat gas is what we would consider more on a narrow side. Okay, it usually means we'll have some good runs with it, and we did have a run down and a run up. Not necessarily good places to get into it, but we're going to have to anticipate the narrow range for the Globex. We should have more of a trending environment, whether it's to the upside or downside, that's still not known yet, okay? But if you're looking, oh, wait a minute. I do have a piece of information on here that I want to use. We've been doing some additional study about the resistance on top of another resistance, okay? So I'm going to retract a couple of things I just was talking about and then anticipate taking a breakout trade to the upside as price breaks that Globex high. When I look over to the left-hand side of the chart, I can see we have a large pocket of points, resistance on top of resistance that move in up to the prior resistance, which will be our target, okay? Could be a pretty fast move, okay? So I'm going to place that trade on there. We haven't rolled out yet. No, we're still on December. Okay, I placed that trade right at the high of the session for the breakout above the Globex high. Let me get that set up over here on my other account. Oh, we already got in that, guys. Okay, so let me get my trailing stop. And we're good to go there. Okay, we got it set up on TradeStation. We got it set up in our prop account as well. Crude oil. The range, we have the the daily ATR, $2.32. The Globex range was $1.30. We're kind of right in the middle of that, as far as the Globex range compared to the daily ATR. When that happens, we often see that taking that open range breakout strategy can be a little more elevated risk, okay? Just shut down. So I'm going to give the crude oil a little bit of time to set up, but I am noticing that we have a resistance area here that is qualified once, twice, 3, 4 times, okay? So we might be able to take this breakout to the upside. I'm going to find the right color. Instead of taking the open range trade, we'll look to take a trade as price breaks out above 71.63. Okay. I didn't put that trade on simply because the amount of capital I have to trade with, I can't trade everything. So the trades I already have set up, I need to wait. Let's see, we got gold, a nice demand zone, 2.6 or 2668 and then 2664. Prices in between a supply and a demand area. Do you have a leg base right in that range? So we'll keep an eye on those. The exchange traded funds are really kind of quiet this morning. I mean, after yesterday's big gap up, QQQ's negative 53 cents, SPY positive 50 cents, IWM negative 27. These are just really small, okay? Now, usually when you're this small, when you're looking at the exchange traded funds, and it's not a big gap up or a big gap down, kind of this quiet sideways, you do need to have the plan to wait a little bit longer, okay? Now, on inside days, as we're looking at several of these products as an inside day, S&P, Dow, and Russell in particular, okay? As we're waiting on those inside days, many times the better trade opportunities happen later in the session around 10:30, 11 o'clock. This is something we've documented. This is something that we've witnessed. And
Order filled.
let's see, we got into that. I'm going to reset that up for the breakout to the upside on the actually.
Order filled.
I'm gonna come back in here and we've got a trailing stop.
Order rejected.
Trailing stop. Oh. There we go. All right, so let's get back out to our equity indexes. SPY.
Order filled.
Looks like things have jumped right up. S&P jumped right up into that zone. That one has triggered. Wow, right at the gate, right out the gate. And Dow just blew through the area, so I'm gonna monitor this one. I'm gonna put a trailing stop on that. Okay, I still have $120 worth of risk on the Dow. Okay, it did gap up into our zone. Looks like it made a new high, and yeah, we're in that one there. What else should we get? We're still in our wheat trade from yesterday. And I do have an order on nat gas. I'm still pending on that one to break the high, Globex high. Crude oil, still waiting. I'll look for the breakout above 71.63 or look to go long in a demand zone 70.39. Okay, the open range breakout trade I'm not going to participate in, mainly because of the size of the Globex range compared to the daily ATR. Gold's kind of quiet. All right, looks like the 5, 10, 30-year bonds and notes, they're getting a little bounce up. Okay, S&P is still holding the top there, and the NASDAQ is making its way back up to retest. Okay. And of course, Russell's just doing his own thing at the moment. Yeah, still can get stopped out. Okay. And here we go. Misses by a tick so far.
Order filled.
All right, I did get stopped out
Order filled.
and stopped out on the Dow, it looks like. Okay, I am going to place an order to come back in at 6,007. If it comes back down out of that area, 6,007 and 50 cents. Okay. There'll be more of a confirmation if it's going to come down out of that. Okay. Yeah, the Dow's working out beautifully though, isn't it? And looks like we got into nat gas. Okay, let's get our trailing stop on that. And I'm going to stop the video right now just to free up some resources here to make sure everything's running good. Okay. All right, so we're in the nat
Order
gas.
filled.
S&P Dow's looking good. Oh, the S&P came back. All right. And we had our wheat. And let me get my stop loss. I'm going to use the same stop loss. Actually, I'm going to stick with the high of the session. That's $76 risk on the S&P. Oh, look at that. First test is a proximal line entry when the leg candle's leaving the zone or bigger. YM target. Wow. I like using this Fibonacci price extension tool. And I'm just trying to figure out where I draw it from. Yeah, it looks like I've achieved that 1-to-1 move down. Okay. Sorry, that yeah, that's right. Target on the Dow is much lower. Okay. Kind of want to stay in that trade as long as I can. If this is a topping pattern that's in play, then we have a lot of room to the downside, a lot of pockets of points in these areas. Okay. I have very little risk at this point to stay in the trade. And it'd be kind of cool if I could stay in it long enough. But the first target, just to give you a range, anticipate a bounce at the support just below the Globex low. There's a zone 43,717. Once we start clearing that 43,540, then we're into some pretty big pockets of points for the downside. Okay, all of this move up was on very light volume during the election results. Okay. Wow, a couple of micros on the Dow looking pretty good.
Order
S&P
filled.
got me again. All right, so I'll leave the S&P alone. We do have a Fibonacci projection up on top, 6,016, 6,020. Okay, nat gas, our trailing stop is keeping us in the trade. Yeah, it looks like I have the MNQ on short. Okay. Yeah, I didn't set the NQ up over here. Okay, so what I'm looking for on the NQ is a 1-to-1 move down and then price come back up and test this zone one more time, going deeper into it. Anybody get the Dow trade? Oh man, that was beautiful. First bounce, 43,815. And 78% of the time, price bounces off support or resistance. Okay. If it breaks the prior session's low, we have a leg base. I think I had to go down to like a 7 or 8 minute chart to get that picture. We found the 3 touches to buy territory. So that would be a legitimate place to anticipate taking a profit, 43,717. Okay. And that would be a nice little profit on just 5 micros there. Okay. Nice job, Miss Chris. And how we doing on the Russell? Okay, the Russell, remember we got that speed bump just below the Globex low and prior sessions low. Inside day, we're still thinking about the gap fill. And that gas bouncing around. I may just jump out of that one. My trailing stop is pretty tight.
Order filled.
There we go. I didn't have to do it. It did it on its own. Okay. And we got about $100 on the MNQ.
Order rejected.
Oh, buy stop. There we go. Thank you
Order
again, Summer,
filled.
for showing me that little trick there. All right, crude breaking the Globex low or at the, there it goes. So we'll look for that demand zone on crude and keep an eye where the 50-day moving average is on that one as well. Heating oil is pulling back as well. Heating oil not yet at the breakout. I stayed in the wheat trade and I stayed in the direction of the initial entry. We had this one yesterday in the community room. We got long about 565 2/8. And we price moving back up going through this dead space. I held the position and I'm still anticipating price to move up to at least that 582, 583 area. Now just going out, looking around. See what we have to participate in. Well, the S&P is still not making a new high yet. Nasdaq's coming down nicely out of that zone. Oh, I had a trailing stop. That's why I got out of in the YM. Nice move on that YM though. Stay away from the breakout trade. Russell's still an inside day. Just wait for the zone. It's working out pretty good on the NQ. Just wonder if there's another place to get back in on the Dow. And dropping down to a tick chart. Almost got myself into a trade that I shouldn't be. I'm like looking for a trade so intent, and I'm saying, oh, it's bouncing back up to the leg base. But you know, these are not active until price breaks that support. I mean, we're always there may be a trade, okay, but we haven't broke that support yet to make these zones or even a sell territory active. Okay. If you're going to look at taking the breakout at 43,860, we do need to find a new leg base group of candles before that happens. Okay. And Russell coming back up to fill the gap. Nasdaq coming down pretty good. I'm going to grab a profit on that one. We got about 235 bucks.
Order filled.
Okay. I might take a poke at doing some micros on this gold. Let's start off with 2 micros and I'll start to build a position on this, but I need to start off small.
Order filled.
And starting off small, I can give myself enough wiggle room to get things underway. I just entered gold long, 2 micros, and placed my protective stop loss at the distal line. All right, IWM's making a strong move back up. Qs, SPY, diamonds, all just kind of doing the sideways thing. This is why I wanted to, the comments that we talked about earlier is that we're not in a downtrend yet. So every trade short should be considered a counter trend trade. There's nothing wrong with taking counter trend trades. They are smaller profit margin. Okay. And they tend to have a little higher element of risk. Mainly because we always stay too long, and I'm in that group too. I know it's a counter trend trade, but I wanted a big move out of it. Start whacking my head there. We do have the Fibonacci projection at 6,016, 6,020 that we're looking at. Look over at the Dow 30 stocks and let's assess what the cash value is and compare it to where futures are trading at the moment. We got 3 Dow stocks that are negative over 94 cents, and we got 7, 8, almost 8, well, 7 that are positive. Okay. So the net results is we have 4 positive. We multiply that by 2, that gives us cash value of 8. Okay. Right now, S&P futures are relatively flat. I mean, the S&P futures are at 9, cash equals 8. Not much to go on until we get a solid setup. Nice job, Miss Chris. I had a trailing stop on that of 50 points, and that little bounce back up just grabbed it. Okay, so the NQ, we got, and let's just come back. This is a great little lesson on this. If we can clip it, I'd love to have this piece that I'm talking about right here. It'd be kind of fun to put this in as a short video clip in our Mastering the Charts Part 1, where we talk about how the leg candles leaving the zone are bigger than the leg candle in the zone and how the zone can be used once. First test is a proximal line entry. The price goes about a 1-to-1, which it did exceed a 1-to-1 drop. And then it comes back and goes deeper into the zone. Now, earlier we calculated that 88.6% retracement inside the zone put us about 21,247. Okay. So I'm going to come back in there, and I think we still have the trade set up for that. Yeah, 247. Okay. So that trade's already set up. First test, we hit the proximal line. Second test, looking to go deeper in the zone. Let me set that one up here on our prop account as well. 247. Once filled, I'll use that 263 as my my stop. How we doing with the questions? Everybody, all questions covered? If you're watching our live stream, just go ahead and type any questions that you may have in there, and the team or myself will answer those questions for you. Gap fill on the Russell. Remember, we talked about this earlier in the session. Inside day, look for the gap fill. S&P's already filled the gap. NASDAQ filled the gap. Dow filled the gap, and the Russell as well. Okay. Wow, 3 touches of that area. And again, here, if we're looking at the Lake Base group of candles, right? As prices leaving that area, the lake candles leaving are bigger than the ones in the zone. So seeing price come up and go a little deeper in the zone before looking at taking a short trade. Okay. On the NQ, we did place a trade at that 147, 247. Okay. Yeah, S&P looks like it, or SPY, excuse me, still looking strong to the upside. Qs have gone sideways a little bit, and the Dow looking at still in that uptrend as well. Ooh, go wheat, go wheat, go wheat. Check out a couple of the other agricultures. Soybean meal. Yeah, still waiting on that one. Soybeans. Still making a move up. Corn. Corn approaching a supply right there. 431.38. And another resistance, so might be like a 1-to-1 or 2-to-1 pullback. I'm gonna set that one up. We're still on a December contract, so that's Charlie Zebra 24 or ZC for the pit. 431.48. Set that up. Bean oil. Bean oil also had a nice move up. Looking at 49.27. We're on the December contract. So the BOZ 24. Anybody get in on gold? $49.27. Okay. Since I'm really not strong about the uptrend, I am gonna adjust my stop loss. I don't have a stop loss. Right now, I've reduced my reduce my risk on the trade to about $50. Okay. We got bean oil set up. Make a trade short. What was the other one? Corn. And we have set that trade up as well. And we're just in wheat and gold. Oh, thank you, team. Yeah, we do have a consumer confidence coming out in just a moment. Remember, this is last month's numbers, not this month's, okay? Consumer confidence might have changed a little bit more on the bullish side due to the election results, okay? But that's only happened in the last couple of days, so that's the numbers that we're seeing today are reflective of what happened last month. I'd really like to see it pop up there and be able to capture all of this. There's a tremendous lesson as we watch when a zone can be used twice and when a zone can only be used one time. There we go. All right, we are making some new highs on S&P in an uptrend. So I'm going to look right here, Lake Base, 6,008. And this whole area just became a new buy territory with the breakout. So I'm waiting on the S&P, looking for an entry, 6,008, 6,005. So nat gas just started basing right there. How we doing with crude oil? Yeah, crude coming for us. Man zone, let's go take a re-look at that. And okay, because the zone on overlapping a zone, so I'm going to target in the middle of that. right in this range here. Now, this is one of those trades that we can set up ahead of time. And if we so happen make the 3 touches on the left and we have that low pivot point on the right, we could anticipate price moving back up and then going into that speed bump area before pulling back. Okay. I'm going to set this one up about 70.07. Nice job, Liz. I got you. So you saw your breakout, price came back in and jumped on board about that 6,011. Okay. I might be waiting a little longer. Wow, so quickly went right into that holding mode. The other thing to keep in mind, I forgot to put this in the notes. I was thinking about putting it in there earlier, but it didn't make it in. We have also observed that the 5 days before the FOMC meeting and then the 5 days after the FOMC meeting, we've had some good price movements. Okay. Well, it is starting 5 days before we see the run up, and then 5 days after we see the run down. Okay. So it doesn't mean the rundown's happening right now. I think we need to make a topping pattern before that goes. And keep in mind, when you go back and start looking at all those topping patterns in history, they can be pretty whipsaw back and forth as a topping pattern before the trend gets established. Now, if you go back and look at those reversal patterns and such, whether it's coming off the bottom or coming off the top, they provide us with a lot of good information, structures and patterns and what to look for, okay? But reversal patterns are one of the more difficult trading environment because of the volatility, okay? All right, still seeing Dow come back a little bit. I want to take a look at the smaller time frame. And we're still making an accumulation of orders. Nothing there telling us to go short yet. Okay. Russell's still an inside day, so we have to anticipate if it does if price does drop into that speed bump, that demand area, might look at going long there. Now remember, the time of the day is important when price arrives at a demand zone or goes into a supply zone. This is another observation. And it took many months of observing this before we started trading it. We thought something was there, but then we had to document it. And now we've incorporated that into our trading plan. Okay. And it involves being around the inside day, trades taken later in the session, no breakout trades. And all these things come playing together here, okay?
Order filled.
What did we get filled on there? Gold? We already had gold, didn't we? A price coming down for crude oil. And I'm gonna anticipate another breakout trade on nat gas. And we've already set the trade up on crude oil and prices coming right down to it. Now you may get a bounce off the proximal line, but this is kind of a zone on top, zone within a zone. So that's why I targeted the $70.07 as an entry. But you have to anticipate 3 out of 4 times you're going to get a bounce off the proximal line, and that bounce is generally about a 1-to-1. We're still waiting down here for our fill at 70.7. We'll have about 7 cents worth of risk on that trade. Okay. Crude oil is also down $1.99 and 2.7% on the session. Oh, corn. That's what we got triggered on. Okay. Stop loss, corn. One contract, 433.
Order filled.
I just got stopped out on gold after I adjusted my stop up. So I lost $50 on the gold trade. Okay. Come on, crude. Come on down. Make us look good. Now, with these 3 touches over on the left and this low pivot point, this is one of the price patterns that we see in front of a V-shaped reversal. Okay. So the V-shaped reversal is a pretty aggressive reversal pattern. Okay. So you're taking this move here, and then we're taking this move down to line it up with a Fibonacci price extension. And if it's going to be a V-shaped reversal, it'll result in a 224, 2618, or a 314 extension. There we go. Yeah, and they're all in the same area, so that 70.17 down to 69.94. Kind of a zone inside of a zone. Fibonacci measurements inside the zone. Yeah. Sucker nat gas triggered. Placing my trailing stop. All right, I'm gonna come in at 70.7. I'm gonna jump in on this with the prop account too. Dollar's been inching up. 10 years moving lower. Wow, that's strange. Here, the 2-year went up, 10-year went lower. Everybody's still fat and happy. Nobody's looking to jump out yet. We're still looking for the market to go higher. Notice what the trend is getting a pretty high reading. Okay. But this may be centered a little more around a short squeeze. Hey, the Dow hit the Fibbo projected move. Nice pullback on the S&P. Still waiting on the NQ to come deeper into the zone. Dow's going to the moon. Russell's stuck in the middle. Silver's also coming down to a zone. 31.30, 31.13. Heating oil is breaking that support. Okay, so that means that we have this area as a sell territory. Oh, come on, crude. You were supposed to go right down there. Dow just still climbing. S&P. There we are. Now, for me personally, this is going to be a little more risky. I'll keep it as a small position. Price hasn't come back to the leg base, but it is basing right on top of the leg base zone. Okay. Usually when it starts to base within a 1-to-1 of the zone, okay, you can get a small bounce out of that, but not necessarily a change in trend. Okay. I'm looking and I'm looking, I'm trying to find us a good trade. Boy, the 30-year bond is going nuts. 5-year. That should be bullish. Euro's back into a demand. British pound. A demand.
Order filled.
I didn't get it out yet. No, it stopped out. Nice job, Miss Chris. Seems like you're using me as an odds and hatcher. When I shy away from the trade, you go after it and you come out looking pretty good. And that's perfectly okay. All right. It looks like crude oil's almost there. Gonna be a little more elevated risk. Heating oil hasn't made a turn yet. Here we go. Come on, you can do it. Down 3% on crude oil, almost to our target. The low was 70.11, misses by 4 cents so far. Come on, pop in there, pop in there. Now you can get in early. My stop is still going to be $70.01. Actually, I think I'll take it down to 69.94 area. But if you choose to get in, yeah, I'm gonna take one on the bounce here,
Order
but I'll add
filled.
on. Shouldn't have done that though, I think. Diamond's still making highs. Looks like the SPY is coming back up. Q's coming up. And Russell. Still no breakout trades on Russell. Zone entries only. Righty. Looks like our corn is working out for us. A couple of little levels it needs to get through. Before back to that qualified demand zone. Anybody get the corn? Yeah, let's come back and look at heating oil. Looks like we got a couple of little speed bumps along the way. This is heating oil. Yeah, we need to clear that little level. It bounced right off of it. Aussie dollars coming down to the zone, euros coming down. Crude still hanging out. Well, these markets get, they're not easy to trade, you know? You have to be really set in your own rules and how you're going to execute on a trade and manage risk, but also you need to be aware of your trading environment, which is most productive for your style of trading. Okay. Everybody's a little different. Well, heating oil was, yeah, almost looking for a bounce. Okay. Back down. So we had that speed bump that we were looking at on heating oil, which was right below the breakout. It's also a gap fill, and then there's another speed bump just a little bit lower. Okay. So that speed bump there, price dropped down and got a nice bounce. Now, heating oil tends to lead what crude oil does. So that bounce out of that gap fill and our speed bump right there, we may see price come back up to the supply, which is the leg base that was created before the breakout. Okay. And we just want to make sure if that zone is fresh, which it is, okay, or if it's active, and it can only become active in a sell territory if prices moved away greater than 2-to-1, okay? At least that's the rules that I've acquired for myself, okay? Yeah, we got a little bounce off of it. I'm gonna step out of that with this.
Order filled.
Leave my order out there to go at 70.07. Boy, Russell just went to sleep. Still waiting on the NQ for a zone entry, 21,247. Now, Fibonacci projections are not necessarily places we look to take a trade. We look for a price to change direction, but it does not create a supply zone when we're at brand new highs, okay? All right. Well, that's about it. Is there any questions or comments that I can cover for you before we wrap up our session today? If you'd like to learn more about what we're doing here at themarketinstitution.com, check out the website. I mentioned several times today about the pre-market routine. That's one of our pre-recorded classes. And we call them like a little one-off classes. We do have a couple of classes coming up at the end of November, okay? Now, if you have not been to the Mastering the Charts Part 2 or even observed Mastering the Charts Part 1, okay, make sure you get that foundational course under your belt before you come into Mastering the Charts Part 2, okay? I'm going to encourage you to get really up to speed with the way that we do our Mastering the Charts, where we find the leg base. Get yourself studying picture perfect past trade setups so you know what they look like, and you're able to participate in those, okay? But Mastering the Charts Part 2, we're made some revisions. We're doing some upgrades on that. So not a lot, but I've not taught that class enough to where I'm really comfortable with it. So I want to, well, I am comfortable with it. It's pretty easy, but I want to be able to have that good foundation of Mastering the Charts Part 1 so that you can realize how powerful Mastering the Charts Part 2 is when we start tying these little pieces together, okay? One last thing, the daily chart looks like we got 1, 2, 3, 4. We're on our 5th up day on the S&P daily chart, okay? Looks like the 5th up day. So if today closes positive, then we might anticipate Monday being a down day. Now, at the end of the session, price could, of course, go up on Monday and then close down, okay? At any rate, I wish you all a good weekend. Happy Friday to everybody. And trade safe. Don't over trade in a lot of this. Just wait for the trade setups to come to you. Crude oil, still basing right there. Nothing missed on that. Yeah, I think we're good to go. We just have our corn trade. And we have $87 worth of risk on the trade, and we got about $75. Well, we got $87.50 in our pocket. Okay, so a nice 1-to-1 right there if you want to put that in your pocket. If not, you're looking at the next target at 427 and 6/8. Okay. So have a good weekend, everybody. And yeah, I was looking at that, Liz. I was looking at that doji candle 5 days ago, 4 days ago. Maybe I need to go look at the different charts. So okay, thank you for that. Yeah, it just caught my eye on when I was doing it. So all right, you guys be careful. Rest of the day, we should find zone entries on the equity indexes. And now's the time to start looking to get those trades set up. Have a great weekend, everybody. We'll see you Monday. Bye-bye now.